Yeah, we are off.
Okay.
It always makes me laugh. The transcription of my northern accent comes out really funny words. Anyway, okay, go for it.
Oh, sorry, you want me to start? Sorry,
Yeah. Oh,
Launchpad.
I can.
So
No, I
welcome.
can.
Sorry, we're getting confused.
I'll tell you what. I'll do these first few.
Yeah,
Yeah, and
go
then
for
you
it,
do the bit
Lucy.
about
Yeah,
the
that's
the
fine.
different kinds of things. So, okay, sorry. Let's be more professional. Launchpad th engaging with customers 3, which is our final support session, is about understanding cash flow. Thanks, Elaine.
Oh, sorry.
So you can see this is the final session of the 9 support sessions,
Oh,
but we've got a session tomorrow that is about how to
oh,
enter the
sorry.
creative.
I was
Oh,
trying to let someone in.
I'll
Sorry
let them
about
in.
that.
I'll let them in. You
Thank
just
you.
share. I'll let them in. It's fine. So yeah, this is the last of our support sessions, but as you know, those of you who've been coming to all of them, we have recorded everything and we've also got the presentations. Next week, we will put all of the videos onto the Creative Careers platform, and we'll also put the PDFs of all the presentations so anyone can access any if you've missed any. And equally, if you would like us to email any of them to you, we can do that as well. I will also put some resources in the chat later on when Elaine is talking. Thanks, Elaine. Today we're going to talk about how to understand cash flow and its impact, how to build a very straightforward, basic kind of financial model that supports your goals, and also understanding the lifetime value of a customer and kind of how to consider customers. As you know before, if you've been to these sessions, our support sessions are based on the Nesta Creative Enterprise Toolkit, which you can download for free. I'll put the link in the chat in a minute. And today we are using section 4 of that. If you click on the next slide, Elaine, which section 4, which has got the detail about this. So this is a free document that you can download. It's really, really useful. We use this as a guidance and a starting point for our talks. Thanks, Elaine. So understanding cash flow. Lots of people get very worried about understanding cash flow and kind of avoid it, don't like anything to do with it, try not to think about it. And I thought this is quite an interesting quote, this quote from Joanna Batsford, who's a designer and illustrator, who said, "It's taken me a bit of a while to get over my belief that I have to be on the breadline to be running a creative business. I realise it's about making money. We sell designs, we make money, then we can be more creative and take on more new projects." There's a lot of kind of different levels of things which impact pricing and selling your work and promoting your own work and kind of valuing yourself and your creativity. And this is quite important. If you're not making money and you're not making enough money to live on, if your business is your sole income, it's a hobby, not a business. So it's really important to remember this, to value what you're doing and realize it is about making money. Even if it's a side hustle and you've got multiple streams of income, it still needs to pay for itself, and kind of you need to be paid for the hours that you're working on it for. Thanks, Elaine. So Elaine's going to talk about this now.
Yeah, so one of the things that we wanted to sort of touch in on today, because it really relates to your sort of cash flow and when you're thinking about finances in your business, and it ties back into all the other sessions we had around sort of marketing and who's your customer. So this is called customer acquisition. We mentioned it in our previous session, and we're going to look at sort of customer acquisitions, i.e., sort of bringing customers in, acquiring customers, and retaining them. And it's something called the lifetime value of a customer. So let's sort of delve in a little bit deeper as to kind of what that means, what that might look like, and why is it important? Well, many businesses cannot survive on a single order. Repeat orders reduce marketing budgets. So if you think about that, we looked at the example yesterday when I worked with an electrician. That's now they now have a sort of a lifetime value with me. They advertised in a local community handbook, a little sort of newsletter. I found it, and now I'm going to be a repeat sort of customer. So whatever they spent on that, they'll get money back. If anyone's got their microphone on, can they just turn it off because it's giving a little bit of feedback? Thank you. And also, it will make your company more competitive. So trying to find customers, that are lifetime customers or lifetime value customers is really important. So there's different ways in which you can do that. And it's essentially about, how much did it cost me to get this customer? What was the means of getting them? And you can tie that into your cash flow and think about, how much you're spending on marketing, etc. And there's a few models that you might want to think about. I thought this was quite interesting to kind of look at from the perspective of, how my business functions, how I bring customers in, how those customers stay with me, we retain them. And different models can offer different options. Now, there's a few here. There's 8 that I've listed here. There's probably some more. But these are really good ones to think about. Some may be relevant to you in the sort of area that you're working in. Some won't. But I think they're quite inspiring to give you ideas and think about, is there something that I could base my business around, or I could add on? So we'll have a look at them in a little bit more detail. You can think, can you match one of the models to your industry or the types of customers that you're targeting? So let's have a look at them in a bit more detail. So one of the models would be a subscription or a recurring revenue model. We're all familiar with those, might be something like a membership club or a subscription box. I've recently signed up to one for my cat. To get cat food. It's kind of really good quality cat food, and it's a subscription, so I get it every month. I subscribe. So that's their business model. There's lots of examples of that. But what that means is it's ideal for customers who use your product regularly or your service continuously, and it is a predictable sort of monthly or annual income for you. So I won't go over all of them in lots of detail. This is just to quickly touch on them, give you ideas. But that could be a model that works really well for you if you're selling a product and you're having a customer that regularly buys from you, or even comes back and uses your service regularly. Then we've got tiered membership or loyal programs. So they're designed to reward long-term sort of high spend customers. So examples of that could be like airline reward points, retail loyalty tiers as well. So you can get silver, gold, platinum. I've got one with Rituals, the kind of beauty kind of brand that's on the most high streets. And you can, the more you buy, the higher tier you go. And when you go up, I think I've gone up now. I think I might be at gold. And I get a 5% off certain products that I buy each month. So there's sort of loyalty programs, or those tiered membership that might be something that could work well for you. It definitely encourages an emotional attachment to the brand because you feel like, oh, I'm getting something back. It's worth it. So, that might be something to think about as well. High touch, high value service models. So these could be used for things like perhaps where you need to really nurture a client. They're often particularly predominant around things like business to business models. So where you may have a client that you want to kind of really nurture. You want to build that relationship because they bring a lot of business to you. And so again, that might be something that's relevant for you, or it might not, but it's something to think about. And they are generally tend to be kind of long-term, contracts. So it's the customers that really value that relationship as much as the kind of service. And then we've got ecosystems or platform models. And a really good example of this that we can all relate to is things like the Apple ecosystem. You buy the Apple phone and then you get the Apple Mac computer, and then you might need the lead to go in because you can't just buy a generic one. So, that's a really good, you might have the software. So it's a really good example of that. Adobe Creative Cloud, smart home platforms as well. We all kind of use those. So they're really good examples where customers get sort of multiple products that increase the value the longer they stay, and the more that they sort of want to engage in it and use it. So it creates a sort of dependency and reduces like churn of customers or clients, and it's a great opportunity to cross-sell and sort of upsell as well. Usage-based pricing models. So again, that's customers pay based on consumption. And, that might work for you depending on what your business is. If they're regular customers, and they're buying more from you, or you might have sort of tiers within that. And then we have premium boutique or luxury service models, which may really relate to some people here at UCA, depending on what you're producing. But that really, it kind of is really effective for customers that are willing to pay more. They're driven by experience rather than price. I'm very much that customer. Pay much more at my local shop for a product I could probably buy from a supermarket on the high street, but I just love the experience. They merchandise it well, they support local businesses, etc. Often it's luxury brands as well, like boutique travel, luxury wellness and beauty. So again, that might be a case if you've got a product that you're making, or it's a one-off, or it's personalized in some way, then that might be a model that you can have a look at and think about that. But it can create strong sort of brand loyalty. Community-driven models. They're often things like, learning communities, professional networks, niche hobby groups as well. So that might be relevant to you. But it's always about the customer feeling like they very much belong and they have access to the group. There's that connection. And there's definitely a high retention due to that sort of emotional investment. So that might be relevant to you if you're producing something that is very much about a local community, or even something online where there's an online community. Long-term contract models, again, that's very much about, if you have customers that are kind of going to stay with you for a longer period of time, it reduces down those sort of short-term turning over of clients very quickly, and it builds a very stable income for you. And it's really good for upselling and kind of renewal. So, for example, my brother runs his own business, but he's not based in the UK, he's based in Toronto, and he runs a sort of town planning. So it's all about people that want to build buildings or get extensions on their houses, things like that. And he doesn't have but he needs to make sure that the people that are based in the UK that work for him have IT, and all their IT is set up because they don't have an office. So he employs an IT company to work for him, and that would probably fall under this, a long-term contract model that will run for years, and it's sort of a business to business. So there's just a few ideas. They're just things for you to think about. How do I get my customers, keep them? What's going to make them excited to stay with me? How can I reward them? So sort of tactics for customer retention would be things like over delivering. So you could think about, can I offer a discount? Can I offer something like a premium membership service? What might that look like for you? Even it could just be really excellent customer service. Regular touch points, might do that free gift, discount, VIP memberships, new products and services to upsell and cross-sell. So they're things to think about in terms of customer retention. Now, the opposite of customer retention, of course, is the loss of customers. So that's what we call customer attrition. So it's the loss of clients over a specific period, acting as critical indicators of business health. So obviously you don't want to lose customers, but it's good to kind of keep a check on that. And again, this will be something different for all of you, depending on, perhaps you sell a product to a retailer. Are they coming back and buying regularly from you? If not, kind of why not, and it's not always a bad thing, but it's good to have that kind of monitoring of, where are my customers? Am I keeping them? Am I losing them? And it can just occur from things like customers stop purchasing, cancel subscriptions, or disengage. And we've all seen that. We've seen big brands sort of, disappearing because they lose touch with their customer, or their product's not really on trend anymore. And you see it with small brands, a local cafe pops up in your local area, but perhaps the customer service isn't that good, or actually the quality of food's not that good. So these things can happen. But it's very important to sort of stay on touch with, reducing that customer loss. And it does require you to be really proactive in sort of customer success, targeting marketing, and making sure that you've got that quality around your whole business offer when we look at those 7 Ps, and that all of those are really targeted and you're monitoring them. So really, the main reason for business failing really is that they run out of cash. And that comes from some of the things that we've looked at over in the last kind of the last sort of 9 sessions. So you want to think about, what's my business model? Is it scalable? Could I use a couple? Can I take inspiration from any of those to bring in those customers and retain them over like a long term, so I have a long-term value? You want to be keep an eye on losing customers. And you just want to watch your cash flow because that's really important. That's what keeps your business ticking over. I'll hand over to you now, Lucy.
Okay, yeah. I was just going to add one thing. I was
Of
thinking when Elaine
course.
was talking as an example. There's an example of a company that Elaine and I have heard about, and they made wedding and engagement rings. Really beautiful. They did wedding engagement rings, and to start with, it was really, really successful. But they didn't kind of expand into other products. So even though they had initial customer relationships and they sold a lot of wedding and engagement rings, they weren't doing kind of other jewelry or rings that could be for different occasions, anniversaries and things like that. So ultimately, they had great initial customer contact, but they didn't expand their offer to keep their customers coming back, and that business went under because of that. So yeah, sometimes it's actually the product as well. It's actually making sure you've got new products so that your customers want to come back to you. So financial modeling. So the business decisions that you make are always going to impact, financially on your business. Some a lot more than others. Where you locate your business, how you price your products, who you use as suppliers, the fact that you might maintain those relationships with the suppliers of materials so you get good prices, how much advertising you have, all of that has important financial consequences. So in order to sort of be aware and control of your business, you need to be aware of the impacts that can happen and think about changes that might happen. So, for example, as I'm sure you're aware, recently, lots of restaurants, this is an example of a restaurant in Broadstairs which started in lockdown, and it did fancy, it was called, I can't remember, Flotsam and Jepson, and it was doing fancy fried fish and chips. So it's fish and chips, but also fancy fried things. And it was really successful, made a lot of money in lockdown and beyond. But when the price of energy went up and the price of gas, they had to close that restaurant because obviously the gas was a major part of running the business. So, sometimes things can change which have an impact. You need to be able to kind of think about your business in terms of profit or surplus, and kind of if you get larger and you're hiring other people, wages, possibly overheads and costs. So we're going to talk about this a little bit more. Thanks, Elaine. So it can be really good to just think about the answer to the following questions, and this really helps you. And your views are likely to change. Like at the moment, if you're a student, you might be thinking, well, actually, I would just like to make a couple of £1,000s out of my business at the moment because I'm studying. But later on, you might want to make more. So think about how much do I want to earn a year? How hard do I want to work? So how many hours do I want to put into this business? How do I feel about employing other people or working with partners? What's my attitude to risk? Am I very careful and I have rent to pay and I want to make sure that I have a very regular income, or I'm willing to kind of expand and spend money before I've made it to promote and possibly become a larger business? And how self-disciplined am I like to be? So thinking about these kind of questions can really impact you, and it gives you a bit of a grounding and a start with to think about the kind of money that you need to make. Thanks, Elaine. So the next question to think about is, what do you think your annual turnover will be? And that means it's the sales that you'll have in 1 year. What kind of amount of sales do you think well, I feel established now, I feel that's kind of sensible. It's a realistic amount. I can live off the money and that kind of thing. You also need to look at what your competitors or any competitors charge for their services or profits to get an idea of a realistic cost. You want to think, what do I want to charge for it, as well as looking at your competitors. And then you need to think, how am I going to generate the sales that I need? So sometimes people say, oh, I want to keep my product really realistic, and I'm only going to sell these notebooks that I make. I'm going to sell them for £10. And you might think, well, that's very reasonable. I get lots of customers because my notebook's only £10. But actually, you've got to sell a lot of those notebooks to pay your wages. Whereas if you said it's hand designed, bespoke, printed diary, and you're going to sell them for £50 to each person, maybe you don't have to sell as many. So it's kind of thinking about how you're going to generate the sales, how you're going to make the money. Thanks, Elaine. So somebody was kind of that used the information in the Nesta Creative Enterprise Toolkit, saying, I've realised now that unless I'm making money, it's not actually a business at all, it's a hobby. Thanks, Elaine. So there are also things to consider like direct costs and indirect cost or overheads. And these are Direct costs and overheads happen in all businesses, okay? And so direct costs are the things that incur as a direct result of making a product or selling a service. So raw material costs, labour and advertising. So if your business made and sells product, the direct costs are going to be materials, your own labour, how you post those and distribute them, the time spent on design and the time spent on advertising and marketing to make each product. Okay. If it's a service or a freelance business, how much are you charging for your time and how much of your time is spent developing and marketing? Because what you have to remember is you're not actually paid for developing and marketing if you're freelance, you're just paid when you're doing your service. Indirect costs and overheads are the costs that you and your business incur, even if you produce or deliver nothing. So, in other words, how much do I want to pay myself as a salary? Where's my business going to be located? Am I renting a studio? Do I have to have a phone in there? Do I have to have Wi-Fi? What's my insurance going to be? You know, is there a gas bill on the studio? That kind of thing. Are there business rates? Do you need to pay an accountant? How much is that going to cost? Do you need things like postage and stationery and delivery? You know, what's the cost of that? Do you need to pay other consultants? So are you kind of, you know, having relationships with other people? Maybe you're going to work with a shipping company, you know, or delivery company who will do that for you. So what are your indirect costs and what are your direct costs? So cash flow really shows how much money is coming in and out of your business at any one time. If you understand your cash flow, then you know when you like to have bills coming in, and more importantly, when you have enough money to pay them. But working out a cash flow, you can identify possible problems in advance and decide what you might do about them. So, for example, this is where it's really key to start to think about what your year might look like as a business. And there's always a point when you're setting up a business where you're spending a lot of money and not making any money yet, because you have to invest in the business to make the products, rent the studio, buy the raw materials. You also might invest in marketing, for example, going to a trade fair or paying up front to get a discount on a great place at a craft market. That means that that's a lot of bills at the beginning, and then you kind of got to sell a certain amount afterwards to make sure you can pay them. So knowing the timing of when things can happen is really key. Thanks, Elaine. So money in on a cash flow is money from your sales. Any financial investment. So, for example, if you've applied for maybe a grant from your council, you've got a bank loan, you've got investors, that would count as money in. And maybe you've got an interest on surplus cash. If you've made a lot of money, you've got it in the bank and it's making interest. So that's money coming in. Money coming out is direct production costs. So things like materials, labour, packaging, advertising. Indirect costs, so you've got your direct costs and your overheads again, rent, utility bills, insurance. Capital investment, for example, if you're buying, like you've had to buy laptops, maybe you've had to buy specialist machinery or a sewing machine, that kind of thing, equipment. Maybe you've got loan repayments, and this is if you've had a business loan and you're paying out on it as your business works. Thank you, Elaine. So it's kind of a diagram of what it looks like. So the money in is sales, finance, which is from investment or from grants and things like that, which you don't have to pay back. Interest on any capital that you've got in an interest gaining account. Money out is direct costs, overheads, any capital investment you've got to pay back on, and any dividends. Thanks, Elaine. And what's in the middle is what you need to make your business run. So helping you to understand kind of cash flow, profit and loss, and balance sheets. Now, these are really complicated. People get really, really worried. And it can seem really boring, but understanding your cash flow and understanding what you're owning, what you're earning, what you owe, and whether you're making money is really important. So straightforward as possible, cash flow shows the movement of cash into and out of the business at the time that it occurs. Profit and loss is a term used by accountants, and it's accounting view of the profit or loss earned by the business on the date an invoice is raised. So this is not kind of rather when you get a payment in, it's the date the invoice is raised over a particular period of time. So they might say, over the first 3 months of the year, our profit has been this and our loss has been that. Or they might say, over like 2026, our profit was this and our loss was that. And this is the kind of thing that if you watch Dragon's Den, they'll talk about a lot. And you'll think, oh, is that a successful business? Because they seem to still be making a loss, but they tend to talk about the profit and loss over usually a 5-year period. And you'll notice that what happens on Dragon Den is the profit is going up and the loss is going down, and eventually they break even, which is when you start to make money. And the balance sheet is a snapshot of the assets and liabilities of a business on a given date. So these are kind of accountancy terms, but hopefully that kind of helps a little bit. Thanks, Elaine. So to safeguard against running out of cash, it's really useful to create an annual cash flow review that you kind of look at every year. And this is also explaining about net profit. So net profit is the actual profit a business earns after deducting all expenses. So in other words, this is after you've paid out everything else, you've got net profit. So net profit equals your total income minus your total expenses. Okay, because sometimes people say, oh, I've sold 575,000 umbrellas this year, and my profit is this vast amount of money. But actually, that's because they haven't taken off. Gross profit is before you take off the expenses. So what things do you need to think about? New sales, and these are obviously linked to the cost of acquiring a customer. Regular sales, which are linked to attrition rate. Cost of the goods sold, gross profit, overheads, and your cash in the bank. Thanks, Elaine. So as a starting point, if you're panicking, you're thinking, oh my God, this is really complicated. We don't expect you to know about all of this at this point. We don't even expect you to do detailed versions of this in the detailed financial plan if you're entering our competition. This is more just kind of an overview and to get you started. And if you read through the Nesta Creative Enterprise Toolkit slowly, it's got all of this in detail. And I've also got some resources you can access on the King's Trust as well that are really, really helpful. As a starting point, it's a really good idea to just kind of do this and actually think, what are my costs? You know, how much money do I need to earn? You know, what do I need to live? What does it cost me to live each month or each year? Like, what are your living costs? Have you got rent or a mortgage? What do you pay in bills, council tax, credit cards and living expenses? How much money do you need? Once you know how much you need, and that will depend on your individual circumstances, then that basically tells you you need to earn at least that through your business in order to make it survive and grow. And it really helps you to do that. Okay. Thanks, Elaine. So the King's Trust, which was the Prince's Trust, has really, really fantastic resources. If you're under 30, you can apply for loans from the Prince's Trust for businesses and get a business startup loan on very low interest. And they sponsor and support lots of people who wouldn't get a business loan through a normal bank. And they've supported thousands of people. It's a really, really good organisation.
They're actually supporting sorry to jump in, Lucy, they're actually supporting our competition winner from last year.
Yeah, they are. Yeah.
Yeah, she's gained a grant and they've given her mentoring as well. So it's definitely worth checking it out.
It's a really good organisation. Whoever you are, there are loads of enterprise and business resources on there. So there's a business plan pack, which you can download, which has got additional information that will be helpful, as well as the Nesta Creative Enterprise Toolkit. But they've also got these amazing business plan templates. So they've got business plan financial tables that you can just download and start to use, and templates and things like that, which are really helpful, which helps the kind of financial bit. And they've got step-by-step instructions about how to do it. Thanks, Elaine. Okay, so yes, it's in the chat. I've shared the link in the chat already. If you go just at the top, there's the one to the Nesta Enterprise Toolkit, and then there's the King's Trust one as well. Okay.
And just to jump in before we just move on, you know, I think some of the things we've touched on today, Lucy, and I hope that we want to try and break down some of the barriers, because sometimes language is used in business, particularly sort of accountants or people that come from very strong business backgrounds, that we don't want that to be a barrier, and it certainly doesn't need to be a barrier. But it's also important to learn some of the kind of terminology, some of that language, because it'll make you feel a bit more confident, but certainly don't allow it to intimidate you in any way. You know, use these resources to help you. And, you know, I think everyone on the call, you're here at university, you have the intelligence and the capacity to work on some, you know, good basic sort of foundations of your finances.
Yeah, there's also so many helpful resources online. There are apps which you can just download, which will help you do your accounts really easily. You know, it's a very straightforward thing to do.
Yeah.
So This is the last of our support sessions. As I said before, we will be putting the recordings of them onto the Creative Careers platform, so you'll be able to watch them there. We'll put the PDFs of the presentations there, and we can also send all 9 presentations to people if they need them. Tomorrow we are doing our session. It's longer, it's from 1 until 2, and this is where we're talking specifically about the Creative Careers Launchpad Challenge. We're talking about how to enter and how we know what we'd like you to do if you want to enter. It's a really great opportunity. We'd love it if people will enter. There's an opportunity to win £1,000 if you're the main winner. And also the deadline for this is after everybody's final hand in. So that's really important to know. It's the first week of June, and we'll have all the information about that tomorrow. As a guidance for the competition, we'll talk about this a bit more tomorrow, obviously. We give you 3 categories to kind of guide your entry. So to kind of help you think about what type of visitors you have. These are not hard and fast, they're just kind of little guidelines. So are you making, have you got a craft or a small production post made to order business? Are you making a product yourself and selling it? Are you going to be freelance? Are you selling your skills or a service? Maybe you're a photographer, maybe you're doing hair and makeup artist, maybe you've got an idea for styling people's homes before they're sold to estate agencies, all kinds of stuff like that. Is it you selling a service? Or is your idea innovative and maybe would need some financial investment, possibly like some of the ideas on Dragon's Den, because in order to manufacture it, promote it, you would need other investment, but it's innovative and kind of scalable and could become a really large business. Equally, are you doing what's called a social enterprise, which is where your business, part of the profit of your business after you've paid wages and direct costs and overheads, you actually put the profit back into a community or into a group of people and support people through the business as well. So this is what we want to do. Tell us about a brilliant business idea and enter the competition. Does anyone have any questions?
I'll stop sharing.
Okay, I'm going to stop recording. Unlike yesterday when I forgot to, and it's a really, really long video.